so everyone can hear me a little bit better. Okay, so if you will bow with me, please. Our Father, which art in heaven, we come to you once again with bowed heads and humbled hearts. Lord, we'd like to first say thank you. Thank you for allowing us to see another day that we had never seen before. Lord, thank you for allowing us to see another perfect day. And even though our days, the contents of our days may not be perfect, we know, Lord, that if we take you with us and our minds are stayed on thee, that the day will always end up being perfect. So we thank you for that. Lord, we ask that you go with us as we dive into this discussion tonight. We pray that the words that are received by the students so that they can make it live in their daily lives and be better stewards, better servants of you as we go forward and leave this place. Now, Lord, we ask that you continue to go with us when we leave and continue to bestow your grace upon us and your mercy. We can't make it without you. We acknowledge that. And we thank you for that. Lord, these and other blessings we ask and pray in your darling son, Jesus' name. Amen.
Amen. Thank you, Jesus.
Mm-hmm. Candace, did we lose you? She may be talking.
Oh.
Or she may have dropped off. If she dropped off, she'll be back on here in just a second. So just sit tight.
Marcus, I see her lot. Her name is on the screen, but it appears that her.
Okay. Wow. Well, technology is great when it works. Can you all hear me, mic check?
Yes.
Mm-hmm.
Well, it seemed like a really long time to me. I don't know about you.
Well,
I apologize for that.
I thought my prayer was just that powerful.
It was real good. The part that I did hear. Okay, wonderful. Okay, I apologize, you all. I don't know what happened, but you know, like I said, technology is great when it works. So we'll go with that. So Marcus, you just finished praying, is that correct?
That's correct.
All right, wonderful. Well, welcome everyone. It is Sunday. Oh man, it is Monday.
Okay.
It's Monday, whatever day you want it to be. It's a great day to have a great day. How about that? Monday, February 21st, and we are in, what is this, night 3? Yes. How was Valentine's Day last week? Did you all spend time doing things on your list? Something to ask, right? Of course. Did you all get a chance to do any of your assignments? Let's talk about that. Any assignments? Did you all get a chance to do your on what we call homework or success steps? Anyone want to talk about it?
I wanted to say it's, even though I'm taking this class for the 3rd time, it's like a fresh beginning. Every time you learn or you pick up a new skill. So what I really wanted to zero in on was my spending habits. When we did the first questionnaire, the little, you know, are you a spender, or are you thrifty, or, you know, what kind of financial personality do you have? And I was like, you know, this is 2022, you know, new year, new start, you know, do something different. So it was just amazing to me to track my spending for a whole week and see what did I spend, how much I spent, where I spent it, you know, auditing my checking accounts and doing that. All of this is part of the homework. But I mean, you know, it's like first time it was like I was it's this time around, it's like this for me, the third time is the charm. And it's like a lot of things are beginning to make more financial sense to me and click. And I'm proud of myself because I was able to do two things beside track my spending and find out literally to the penny, because I kept my receipts, figured it out, budgeted in the budget for these things. And I'm gonna tell y'all, I'm a thrift shopper. Ross, Dirt Cheap, TJ Maxx, Marshalls, Ross. I am not ashamed. I will never pay full price again. I will not. And on Tuesdays, if you're a senior, 50 and older, get your discount at Ross. You have to ask for it, but it's 10 to 15% off. And so every little bit adds up. Every little bit is a help.
That's
And
wonderful.
I was also able to allocate $100 in savings. My goal is between now and end of November, I'm going to have at least $1,000 saved, if not more.
Congratulations,
So,
Miss Dunny.
I'm not playing with it, y'all. I'm really trying to get myself together and get financially literate. And it is a blessing for you all to afford this to us, whether it's your first time or if it's your 12th time taking it, it don't matter. Every time you take it, you can learn something new. And then when you learn something new, bless and help somebody else and help them, because that's what it's all about. This is a church community thing, but it blesses and helps everybody. It's got a trickle down effect. It blesses and help everybody. The only way it don't help you is you don't have a mindset of, okay, well, I can benefit from this, or my family or my friends can benefit from this.
Mm-hmm.
So I feel like it's a win-win for everybody. But I was really serious about wanting to save, tracking my spending, and I'm very proud of myself because by me tracking it, I was able to figure out, okay, I'm down to the point now where I don't what I call pop-off spend. I call it that's mine. Everybody might have a different name for theirs. The pop-off spend. I don't pop-off spend no more. If you go in the stores, last week ground beef was probably $5. This week it might be $8. We don't know. From one week to the next, the fluctuation of the prices of food, eggs, gas, all of this stuff we gotta put into play. But I don't do what I call frugal spending. If I have a list and I strictly stick to that list. And I try to do everything if I can at one store. Sometimes you just can't do it. You got to go to the other store across town.
Well, Miss Dunny, can we do you a favor this week and give you a gift card to go out to eat on us?
Huh? I wasn't looking, that's fine. I wasn't looking for no gift card, girl.
You didn't have to.
Sure. Oh my
that's
God.
it. And we appreciate you sharing. We do, because what's important for you to realize is that some people may feel bad because this is their second or third time taking the class, but it's good to be able to hear that, and it starts to make more and more sense. So we appreciate you so much. Ms. Donnie, what's your last name? If you could put it in the chat for me, I'll make sure to get you down for your gift card this week. Thanks so much. All right. So Deacon Thomas is here as well. I think he's want to kind of review some homework, making sure we got that taken care of. And congratulations, Ms. Donnie. Thank you so much for that testimony. It was awesome. Definitely what we want to do. All right. So Deacon Thomas, you are here. Are you ready to go? We'll go over some homework before we get into our topics for tonight.
We just 2 minutes, Candace, 2 minutes.
Okay, sure. Gotcha. So I'll go ahead and start the process since he needs a minute or two there. Did you all get a chance to, anybody else track their spending? Did you find out anything else about yourself? That was one of the assignments. Go ahead, Catherine.
I found out that somebody is spending my money, and that person is me. And I had no idea that I was making as much money per month as I was making. And so, for me, it was really eye-opening and shocking, because it's like, how could you have been like really playing with all of this money that you're making and not putting it toward, the goals and stuff, that you have? And so I did learn that I was making more money, and I was just basically blowing it on snacks and clothes and just unnecessary stuff like that. And so I have my goal for this upcoming week is to, you know, pre-plan my meals and to like just plan a lot of stuff out, because that'll keep me from like, oh, I need to get this and get this now. Because anybody that has a new kid, you know, like we don't have time to wait on snacks. They're not gonna wait. So it's like, you know, like, hey, let's go and eat it now. But I was just shocked to see just how much unnecessary spending that I was doing, and that let me see the amount of money I was making. And so I'm gonna do better about that this week. I am.
I think we may have lost Candace again.
Yes, hold on a moment. We've got technical difficulties on the Zoom in. She's coming back.
It's okay.
Anybody else have testimonial want to share? Did anybody play the game that was sent out this week, or track your spending and find lots of new money?
I didn't. Can you hear me?
Yes.
Yes, ma'am.
This is Natasha. I know last week I had reached out to Deacon Thomas because I told him I was going to miss class. But he did ask me that when I come back this week, if I didn't mind sharing my story. And I am one of those repeat alumni. I can't even tell you how many years I've been a part of it now. But I know through this journey, you guys have always shared with us to make sure that we are following up on our money matters or whatever it may be. And one in particular was several years ago, I had applied for a program called PLSF, which is a public service loan program. If you work for certain entities, if you make 120 consecutive payments, then they will pay off whatever the remaining loan is if you stay dedicated to making the payments, no default. Well, recently it came back up about the PSLF being reprogrammed, basically. And I hadn't been keeping up with it. And so I just resubmitted my application, reached back out to them, and I got a letter saying that they honored 9 of my payments. And I thought, well, I know I made more than 9 payments over these years. But anyway, I still stuck with it, followed up again, and I got a letter in the mail that I met all of the criteria, and they paid off the remaining balance of my loan, which was a substantial amount, and most of my debt, actually. Guys, I just had to praise God for that one, for sticking with it and not just letting things be. So be sure that you are checking in on whatever bills you may have out there to make sure you're paying what you're supposed to be paying. If things change, just stick with it, because that's been a true blessing for me.
Oh, that's great.
Thank you, Natasha, for sharing. That's amazing. Yeah. And I think that's something that Deacon Thomas talks a lot about is don't give up on the first time. Follow up. Calling these insurance companies, calling your cable company. Don't take the first answer they give you. Follow up and see what else you can do. And then also, if it's a process, then keep up with the process and continue to follow up. Good job, Natasha. We're glad you're here. Thank you for coming back and sticking with us.
Thank you.
Hey, looks like everybody's got some great testimonials. This class has been phenomenal the last 10 years. And Ms. Vaught, I want to thank you for being one of our regular participants, and it's definitely made a difference in your life. Tonight, guys, it's going to be real important that we just drill down one more time. You got to find some cash flow in this class. Cash flow is what makes everything work. So as you're going through all your expenses on your cash flow sheet, it's important that you cut things out that are not needs. Sometimes we focus so much on the wants, and we don't want to get rid of some of those wants to get those needs. But if you can just be patient over the next 18 to 24 months to find that money. The objective, of course, is to find at least $100, but we think some of you guys can find 100 or 200 or 300 bucks. If you can find those dollars, then we'll be able to implement those strategies that we're going to be talking about. Tonight's a very important class because we try to get all your questions answered, because Candace is going to be coming up later talking about the W-4 and talking about how you can find cash flow inside your W-4. It's really important that you understand, and she's going to go into detail. I want to get into that just yet, but we want to jump into that thing right away. And at the end of the class, we're going to give us some homework for the next class. So I've been excited about the last 3 weeks. We have good participation and people are having success. And that's what it's all about. Candace, are you available to start your presentation on the W-4?
I am. I don't know why my systems want to act crazy on me, but it's okay because I'm going to go and move forward anyway. Let's do it. So I'm ready.
Let's jump in, because that W-4 sometimes creates a lot of questions. So we want to put as much time we can into that thing right away, and then definitely talk about the importance of why.
Absolutely. Let's jump into it. All right. Thank you. We have such a great team. Thank y'all for having me, taken care of me while I went away, because the systems was acting crazy on me. So let's do it. I'm going to go ahead and jump in. Let's do a screen check. Can you see the screen? Put it in the chat. Let me know you can see the screen, because I'm actually going to ask you questions and everything. So when you put in the chat, we're good. All right. We know that we can see. All right. Thank you, Natasha and Nikki. We appreciate that. Perfect. So one of the things that I do every time I speak is I give you a thought of the night. And tonight's thought of the night is that you can do anything but stay the same. Oh, yeah. So many of you, you're taking the class. This may be your first time. Some of you are taking the class and you say, you know what, this is my second, third, fourth time, whatever it is, doesn't matter. You make small changes as you go along, and those changes are for the better. But you can do anything but stay the same. And if your current situation is not where you want it to be, we can't keep doing the same things expecting different results. So we definitely want to start modifying. So tonight, we're going to talk about correcting your tax withholding. Now, and we're going to get into the lost opportunity cost and what that looks like over time if you are overpaying your taxes. So a little bit about myself. Every day, I actually do tax and financial strategies to help people grow their revenue without using their labor. So we file personal and business taxes. We give different tax strategies and help small businesses to make sure that they're doing things properly inside of their business. Now, with that, I see a lot of people, right? They're getting tons and tons of money in refunds. So tonight I want to talk about the importance of a refund. So I'll start with this concept before we do anything. The re means again, and I hope you're taking notes, right? Re means again, and fund means money. So when you get a refund, most times you're taking the money that you gave to the government and they're giving it back to you again. Now, let me introduce you to Coco. I'll talk about Coco a lot tonight, but Coco Johnson decided, you know what? I'm going to pay my electric bill, and I'm not really going to look at the bill. I'm just going to send them $200 every single month. But I'm not going to look at it. I don't have time for that right now. So Coco sends the electric company $200 every month. She's just like, you know what? I'm just going to send it. Don't worry about it. Here's the app. I'm going to send the money in there. Well, guess what? Coco did this all year long. In reality, her bill was only $100 a month. So guess what happened? The electric company, they really didn't send her a check, but we're going to say they sent her a check for $1,200. Why? Because she overpaid her electric bill. She didn't have to send them $200. She sent them $100. Well, guess what? Let me ask you a question. If you got a refund this year or plan on getting a refund or love getting refunds, I want to ask you this question. Would you be just like Coco and overpay your electric bill like you overpaying your taxes? Most people would say, no, of course I'm not going to overpay my electric bill. So the real question is, why would you overpay your taxes? It's the same concept. So the job for me tonight is to make sure that you understand how the small things, right? You got to watch the small things, because the little things and a small leak can sink a great ship. So what does that mean? that means that the small things that are leaking out of your pockets, when we talk about cash flow and finding the money, when we talk about that eating out, like Ms. Catherine said earlier, somebody spending my money, right? When we start thinking about it and looking at it, it's like, man, this stuff is killing me. And those small leaks can sink your great financial ship because you're throwing away your wealth by eating it up, right? Or the restaurants are eating away, are taking your money because you're eating away your wealth. Most of the time, that's the biggest thing. So we want to make sure we're talking about that tonight and talking about cash flow. So let's talk about what is cash flow. Now, if you've been on the call before, let's do me a favor, don't answer, right? Somebody, if you've taken the class before, don't answer. But what is cash flow? Can you tell me? Anybody who has not taken the class before, what is cash flow? Now, I know those of you who've taken it, you know the answer, but let the new people do it this time. Let's see what happens. Because Mr. Thomas, Deacon Thomas talked about it in the last class. So tell me, what is cash flow? Anybody that has not taken the class before?
Money you have left over after you pay all of your bills.
Oh, Miss Kathy, was that Kathy?
Yes, ma'am.
Miss Kathy Burnett, that sounds like a nice gift card right there. You are absolutely right. Miss Kathy, I'm gonna write your name down, Miss Kathy. Kathy Burnett. And that was Miss Donnie Johnson. Okay. All right, perfect. You are absolutely right. Cash flow is the amount of money you have left over after your expenses. I'm gonna give you an illustration. Income, because I like formulas, minus expenses equals cash flow. That's the amount of money you have left over. One time we did a class and the guy was like, yeah, Candace, the cash flow is the money from one bank account to the other. I'm like, yeah, that sounds really great, but that's not really it. Okay. So we want to make sure we understand your cash flow. You want to be cash flow positive so that you have enough money after you pay your expenses to still live and do the things you desire in life. So that's what we're looking at doing. And the W-4 is the first way to find cash flow, because if you're overpaying those taxes, guess what? We want to stop overpaying taxes and start putting that money in your pocket, because that could be money you could be using right now to pay your bills. So let's get into it. Let's give you this disclaimer first. I'm a big disclaimer person. St. Mark and Arvest Bank does not guarantee that you will receive an increase on your paycheck by adjusting your form W-4. Disclaimer number one. Results will vary based on each individual's unique situation, and you want to see a qualified tax professional so that you can make sure you're filling out your forms properly. Very, very important. So with this information that we're sharing, make sure you understand that we're just giving you tips, making sure you do it right. And I'm actually going to walk through it step by step with you tonight. So grab your W-4. You should have it in your packet. Or go online and get it, or just write down the numbers as we follow through, and then you'll be able to make sure your form's filled out correctly. Now this is Tina. She upset. She like, listen, Candace, every time I think about money, every time I think about taxes, I just get so upset. It just makes me want to pull my hair out. Some of you feel this way. And then others of you are looking at me like, Candace, the W-4, well, what is that, right? We like to ask that question. Well, guess what? I'm going to help you get clarity on all these areas tonight. So let's start with the beginning. The purpose of the W-4 is so that we can, hold on one second. I got a message. All right, if you don't have the updated W-4, we can send it in an email, but for purposes of right now, you want to, you can look it up on Google, or just write number 1, number 2, number 3, because it's not really a long form this year with the update. So just kind of follow along with me and I'll walk you through it if you don't have the updated form, okay? All right, purpose of the form. Complete form W-4 so that your employer can withhold the correct federal income tax from your pay. Clarity. If too little is withheld, you will generally owe taxes when you file your tax return, and that may make you pay a penalty. If too much is withheld, you will generally be due a refund. What does refund mean? Anybody want to put in the chat? I'm just curious if you want to put in the chat. If you pay too much, they will give you a refund. Do you know that they put this information on the form, and people still overpay? Wow, something to think. Natasha said, getting your money again. Absolutely. Re means again. There you go, Catherine. And fund means money. Kamira, you're right. It's your money right back to you. So let's keep going. Changes to your personal or financial situation would make you want to update this form. Okay. If anything changes, update the form. It's between you and the IRS. The job cannot tell you how to fill out your form. They can't. It's not their responsibility. It's your responsibility. It's also important to update it every year, especially because if your children are getting older and aging out, if you get married, if you separate, any of those things happen, you will need to update that form. Super, super important. Okay. So let's keep going. There we go. I said any lifestyle changes. Good. So we know what the form is. It tells you how much taxes to pay, federal taxes, not state, just federal. We'll go over the state later. Let's keep going. The W-4 is often incorrect for a couple of reasons. Most times it's not updated annually. I had a friend, she worked for the fire department, and she went from single, she worked there for like 20 years, 30 years. She went 20 years with the wrong W-4. She was single when she started. She had got married, had 2 kids, and never changed her W-4. It needs to be updated and reviewed every single year. And your tax professional really should be making sure of this based upon what your tax return looks like. Okay. Number 2, exemptions are often confused with allowances. And honestly, now there are no longer any allowances because of how they have the form. It's all new. It's kind of confusing, but I'm going to do my best to make it simple for you tonight. So let's keep rolling. If you're married, here's a marriage tip. Now, everybody with the W-4 tonight has their own filing status. I'm going to review the head of household status, but if you're married, I want you to answer the questions as if you were married, but let me give you some tips. And if you're single, answer them as if you were single. Your tips for married filing jointly people. Here we go. There's only one W-4 form in the household if you are married. I know somebody told you that you're supposed to put a number and your spouse was supposed to put a number. That is totally not true. So if you're underpaying taxes and you owe every year, that's probably why. All right, that's the first thing. If you are married, there is one W-4, just one. All right, first tip of the day. Actually, probably like the second or third, but as you know, I got you. Split the number. Here we go. So let's say you have a number on the form that says 4,000. Okay. If that 4,000 is on the form, and we'll go over it in just a minute, split the number between those two spouses, split the number, or the person making the most money will complete the W-4 and the other person will put 0 on their form. They won't, use any deductions on their form. They'll just pay the most amount since they don't make as much as the other person. All right. That's one way of doing it. There we go. One other thing. If you do not file taxes together, this is good. And I'm not telling you how to file your taxes. That's not my job. What I'm doing tonight is I'm just educating you. Okay. If you are married and you do not file taxes together, let's say you file separately, you should not put your W-4 on married filing joint, because although you're married in real life, however you file your tax return is how that W-4 should be filled out. I hope you got it. All right. Now I'm going to pause right here and make sure you're with me. Are y'all with me? Yes, in the chat. Say it out loud.
Yes.
Okay. All right. Woo. I know this is a lot. And when I say it, sometimes it go over people's head. I just want to make sure we got it. Okay. Everybody got yeses in the chat. We're good. We're together. Now, married filing jointly people, take your notes. You got it. Screenshot this page. Do what you need to do. We good. We good. Okay. Status. This is the example that we're going to give tonight, but you're going to be able to fill this out on your own based around your situation. Here we go. This example is Miss Coco Johnson. I don't know where I got these names from, but this Johnson, Miss Johnson, okay, the Johnson family. Head of household. She has one job. She makes about $49,000 a year, and she has one dependent. That dependent is 7 years old. That's the example for tonight. Now you're going to fill out this W-4 the way that you want to fill it out based on your situation. And I'm going to answer all your questions tonight. So let's go ahead and walk through this form. The top part of the form, very simply put, here we go. You put your name. There you go, your social, all that stuff. Wonderful. Now this box section here, letter C, is super important because that tells your filing status. Your filing status says, how do you file your taxes? It doesn't say how do you live your life. It says, how do you file your taxes? If you file single or married filing separately, you would click that box at the top there. If you file married filing jointly, you would click the middle box. And if you're head of household, then you will click the bottom box. Now, I know, men, I know that you feel like you are the head of the household, which is very true. And I agree with you, right? Because this man told me, Candace, I'm the head of the household. I was like, yeah, but you're married. So this is not going to work for this tax form. Let's really talk about what it means to be head of household. Here we go. Yes, I'm going to break that down for you too. Head of household means that you are unmarried. This is the only time you can file. Here we go. You ready? Y'all got this. Here we go. You are unmarried and pay more than 50% of the cost of keeping up a home for yourself and a qualifying individual. Ooh, that's good. I'm going to say it one more time. It says you are unmarried. You pay more than 50% of the cost to keep up a home for yourself and a qualifying individual. That person lived with you for more than half the year, unless it's a parent and you help to support them and take care of them. You could have also had a child that was in college that also you supported. That would consider you could be head of household if that child didn't make too much money over limits. And a dependent parent that, does not have to live with you. Like I said, that one. And paying child support. Ooh, this is important. You see this note right here at the bottom? Paying child support does not qualify a person to be head of household. That means you may support the child, but that does not necessarily just qualify you because you take care of the kid. These qualifications are what makes a person head of household. Got it. Whew. Cleared the air on that. Now I'm gonna keep going. Y'all not really talking very much, but we definitely going. There you go. Okay.
Well, Candace.
Yes.
Miss Candace.
Yes, ma'am.
What if you are a widower and that you can file head of household?
Not necessarily, ma'am. So let me explain.
Okay.
A widow means to the IRS, right? And now in our world, a widow means that someone, your spouse passed away. But in the IRS terms, a widow means that a spouse passed away and left you with a dependent under the age of 17.
Okay.
Ooh, now this is important. Okay. Now, if that happened, you would file as a widow for 2 years only. 2 years after that person passed away. Okay. So does that help?
Yes, it helps.
Good.
I can't file that.
No, ma'am. Don't do it if they didn't leave you a dependent. Now, if your spouse passed away in 2021, you will file that spouse in 2021 and put that spouse was deceased and make sure you attach the death certificate to that form. Okay.
Okay.
If they passed away before that in 2020, in 2021, if there's no dependent, you would just be single.
Okay.
Yes, ma'am.
All right. Thank you.
Great question. No problem. Okay. So married people should never file head of household. There are situations to where if you were unmarried on the last day of the year, that meant you were legally separated, then that is an option. But the answer is most of the time no, but I don't know your situation, so I cannot really give you advice on that. Okay, that's a great question. I think that's Tanel. Just to clarify, unmarried, no dependents, pays all the bills, single filing status, not head of household. If they are, yes, that is accurate, Shannon. You cannot be head of household if you do not have a dependent. You are the head of your household, right? Just for clarity, you are the head of your household because you take care of everything and you make it happen. But if you do not have dependents, then you are not head of household. You are single, taking care of things. And I know it ain't fair, but I didn't make the rules. I just read the documentation and make it plain for us to understand. I hope this is helpful. Perfect, perfect, good. Okay, good. I'm gonna move. Here we go.
I have a question.
Yes, yes, Charles, go ahead.
Okay, suppose if I used to be head of the household, but I came disabled. Now my wife is the only one working. So how was she? Could she claim head of household?
Okay. Now, Mr. Charles, this is the thing. Are you still married?
Yes.
Okay. If you're married, even if you're on disability, you and your wife can still file together, married. And if you get Social Security disability, you would want to file that on your taxes with her. But there's actually more benefit for you all to file together than you would not to file together with her just filing head of household with the kids. There's a higher standard deduction for married filing jointly.
Okay, yes, that's all right. So what you're saying is if I'm on Social Security disability, so I don't have to claim that, but she still can file jointly. That's what you're saying?
You will have to claim your Social Security disability, and it is best if you all file together because it gives you a higher standard deduction.
Okay,
but you will have to claim it. Yes, sir. Make sure you put it on there, because if not, they're going to send you a letter and say, hey, you forgot to claim this income. And you know, that's general information. I'm not, of course, I don't know your situation, but there are more benefits to filing jointly. I'm sorry?
Although it's tax-free income, you still have to put it on there. That's what you're saying?
Well, it depends. So if it's military disability, then that's tax-free income. You don't have to put it on there. But if it's Social Security disability, it comes on a form and they give it to you, that amount every year from Social Security. That is normally tax-free unless you made over a certain limit, and portions of it is taxed.
Okay.
Oh yeah, I know. You might have to get a consultation with me. Because I don't want to confuse you with just this one call, and I probably need to talk to you and your wife at the same time.
Okay, that'll be good.
Yes, sir. All right. No problem. No problem. So I'm going to go ahead and move. This is the second part of the form. Normally, the W-4 night is always plenty of questions. So you all are doing great with your questions. We're going to keep moving so we can make sure we get your presentation done. So here we go. This is step 2. It says complete this section if you have multiple jobs or if you have a spouse that works. Do only one of the following. Okay, what they're saying is you can use the W-4 app. They have a W-4 app that helps you to kind of calculate what should be there. If you have a great tax professional, they'll be able to do this for you with no issue. Step B, if you have multiple jobs, make sure that you're doing good estimates and doing what I said earlier, one person filling it out or sharing the numbers on the form, because it's only one form for the married filing joint person. And if you have 2 jobs, this is important. On letter C, if you have 2 jobs, let's say you're single and you work 2 jobs. One of your jobs, you actually want to put a number, and then the other job, you want to check that box right there that's on letter C, because it's saying, hey, I have another job and I'm going to pay taxes over here at a regular flat rate. It's going to be a little higher because that second job actually increases your tax rate. Okay, very important. Tip, to be accurate, make sure you're keeping up with your information. If you're self-employed, I'm going to say, it says use an estimator. I'm going to say make sure you connect with a tax professional to help you if you have a job and you have a side business or you're doing self-employed kind of activity. All right, let's keep it simple. So Coco, she doesn't have no self-employed stuff. We're going to leave that out tonight, but we can't answer those questions. But she's head of household. She has a job and a dependent. So let's go to step 3. See, we're almost done. It's only 4 sections. Woo, here we go. Step 3. If your income, is everybody okay? We good? Everybody good?
Yes.
Yes. Perfect. Okay. Thank you, Ms. Michelle. If your income is $200,000 or less, or $400,000 or less if married filing joint, you're going to answer the questions below as following. multiply the number of qualifying children under the age of 17 by 2,000. What they're doing now, instead of giving you a 1 or a 2 for each person, all that stuff, they're actually calculating the credits that you'll actually receive for those dependents. Interesting. So if you have, as Coco has one dependent, the dependent is 7 years old, she would put $2,000. If you have 2 dependents and your dependents are under the age of 17, you would put $4,000 because that would be 2 times 2,000. Got it? Everybody have a number on step 3, at least this part. I'm going to move on. Any questions about this one?
No.
Okay, no question.
Yes. So if they are 17, you put in 2,000 right there. That's why it's not 17 and under, it is under 17.
That's it.
Thank you.
If it is under 17. So if they 17, don't put no 2. They had some special laws and stuff for this year that that was special, but that's not qualifying for moving forward. So if they are 17 today, don't put 2,000. Okay, that's a good question. Any other questions on that? Now, if they are still in your household and they're 17 today, let's read the second one. It says multiply the number of dependents by 500. Now, this is a dependent that is not under 17. So they're 17 and older. This would be a parent. This would be a child that are dependent that is in college that you plan to claim. And remember, if you claim them in college, you would need their form 1098T because it's a tuition form. That's important. All right. So all of these things are important. And then add the lines together. Both sections, step 3, you should have a number. Please tell me if you have a number, yes or no. Let me know if you have questions. This is a good time for them for this section. Yes, you have a number, Natasha. Perfect.
Yeah.
All right. Anise got a number. Okay, we all got numbers. Good. Or no number is fine, but we got something, even if it's 0. Okay. Perfect. Okay. No, we don't have a number, Crystal. Crystal single. She said it ain't fair. I seen you say that earlier, honey. I know. Welcome to the club. If you don't have one, that means you definitely need a business, right? A whole nother conversation for another day. All right, good. So it looks like we have some stuff here. This is perfect. Let's keep going.
Miss Candace.
Yes.
I have a question. So if you have the dependents, I have, like, say example, I have one in college and one that lives at home, but the one at home works. Okay. Can I still claim him as a dependent?
How much money did he make?
That's the thing. I don't know that part. Like,
okay. So this is my rule of thumb. If they made 12,000 or less, you really supported them, right? They live with you, 12,000 or less, they could be a dependent. You know, some kids are different. They be liking to be grown. They go and file on their own. Hey, can't file them. So you would not claim that person if they made more money than that or plan to. So if they're working full time, probably a good idea not to do so, not to claim them. But so Ms. Kamira, you'll have to figure out how much that is, at least for this year. And then if you know that they're kind of working full time, gonna get ready to move out, you definitely want to not claim them.
Okay.
All right. And if you're not sure, because it's kind of up and down, because you know all kids kind of different, don't claim them on here, and it'll just be extra if you do get to claim them.
Okay. Thank you.
Yeah, no problem. All right, great questions. So we had numbers here. We're going to keep going. Now this is step 4. Okay, this is step 4. It says optional because it's other adjustments. So let's talk about it. When it says other income not from a job, what they're referring to is like business income, things like that, retirement, dividends, interest, that kind of stuff that you may be pulling out. That's not W-2, so not a job. Okay. So in this case, Ms. Johnson does not have any, but if you do, you would put those numbers there. Okay. So if you felt like, you know what, I'm going to have some business income, it's going to be, you know, $20,000, put that number there because you're getting ready to do some math. All right. Then, but if you're not, right, if you're not, don't do anything. Just leave it. This is the side where, especially if you're running a business, you want to make sure you're doing some tax planning and making sure this stuff is up to date and up to par. But this is no job income on line 4. Line B, here we go. Letter B, child support. No, that would not be included there. Good question. Child support is not a deduction of any kind. You know, I could give you some strategies on some other stuff, you know, but it's not a deduction. All right, good question. If you expect to claim deductions other than the standard deduction and want to reduce your withholding, use the deductions worksheet on page 3 and enter the results here. What they're referring to is business deductions, different things like that, that you may need additional deductions for. That's what you would enter on this line. If it's anything above the standard, here we go. Now, this is kind of a picture of that line that they told you to go look at. I'm just kind of pulling it here for you. Thank you for posting that. The W-4 is in the chat, you all. The W-4 is in the chat if you didn't have it. If you're single or married filing separate and your standard is 12,550, you're wanting to, and you give a little more than that. So it's a combination of stuff, and I'm going to give you that combination in just a minute. But if you're exceeding the standard, you want to definitely put that excess there. Okay. If you're not, it's okay. Don't worry about it. So itemized deductions, mortgage interest, student loan interest, IRA contributions, business deductions, those things would go on line 4B during this section. Now, Ms. Coco does not have any, but I'm just giving you the example of what's supposed to go here. This is always the area where it gets really gray, so I'm kind of slowing down because it seems more complex than it is, and I understand that because it's new. So if you do have questions in this section, it's okay. We can definitely discuss it, but let me go and break something down for you before we go to questions, okay? Last section here, any extra withholding. Now, I have clients that come to me when they first come and they say, Candace, you know, I give an extra $20 on my paycheck just to make sure I don't owe. And I said, well, I understand that you had a bad experience before, but if we fill out your W-4 form the right way, it should balance and we'll know. And if we do your tax planning session like we should be doing, then guess what? You'll know exactly what tax season look like and not be surprised when it happens. Okay. So extra withholdings, I'm the type of person, I don't want to give the government any money to hold for me, and I don't feel like they need any gifts or charity from me, right? So I'm not giving them anything extra. This is your choice, but I'm not encouraging it. What would you all do? Y'all gonna give the government some extra? You think they need some gifts from us? What y'all think? Tell me what you think. I'm ready. Tell me about it.
No.
No, that's right. No, ma'am. All right. But if you want to give them some extra, I mean, it's your money, but that $40 extra could have been in my client's pocket to create cash flow for them. That extra money could have been in your pocket instead of paying them. So if you're currently paying, they need to be sharing with me. I'm with you, Miss Catherine. Catherine. So if you're paying extra, it's okay. Cut that off because you have a new W-4 that we're filling out tonight to make sure it's done properly. All right, let's go. Now, a couple of explanations on some things. So if you're curious about this standard deduction thing, so I know I hit it, but I want to go over it one more time. Whenever I said if it exceeds the standard, everyone in America gets a standard deduction. If you're, depending on your filing status, it's over here on the bottom. Single or married filing separate is 12 and some change. Married filing joint is 25 and some change. Head of household is 18,000 and some change. So that's good, Kamira. So Kamira, your standard deduction is based on your filing status. Depending on how you file, does this make sense? Is what your standard is, okay? Now, Mr. Charles, when I said earlier, I said, well, Mr. Charles, if you file jointly, it's gonna be a little better than her filing head of household. It's because you get a standard deduction of 25,000 versus 18,000. That's the reason that's one of the reasons I said that. So it depends on your situation, but I hope that's helpful, Kamira. Is that helpful?
Yes, thank you.
Good, no problem. All right, so the point here, and the reason I went back to show you the standard is you get the standard automatically. But let's say you went out and you have mortgage interest at $34.50. You got charity, she gave $5,100. Copays and prescriptions, $500. Yes, you get to put your copays and subscriptions in there. Make sure you put that prescriptions in there. Make sure you put that in there. Give it to your tax professional. So that's a total of $9,050. How much? $9,050. Well, if Coco is head of household, her standard deduction is $18,000. Would she want the $9,050 or the $18,000? Of course she wants the $18,000, and that's the standard. That's what they're going to give her. Now, some people say, well, does that mean the other stuff doesn't count? No. It just means that it didn't exceed it. So we're going to input it all, because what's important is that you may be itemizing on the state and not on the federal. Oh, I hope you got it. I'm going to say it again because somebody texted your phone and you were not paying attention. I'm going to tell you one more time. I said, you may be itemizing on the state and not the federal. So you still want to include everything, because everything matters, especially if you're in Arkansas. These things matter. Okay. Y'all good? We all right? I know it's a lot. I'm going to do a recap. Everything matters. All right. That's good. Thank you. Thank you so much, Jamil. Everything matters. Okay. We're going to go. I'm going to do a recap. Now, the W-4, Miss Coco, head of household, this is her W-4. You will have your own. So if you just got the form, I'm recapping. So it's a good time to recap. You do 2,000 times the dependents that are under the age of 17. If they are 17, what number are you going to put if you file them as a dependent? 500. Somebody put it in the chat. Make sure you got it. I have a dependent that is over the age of 17 and older. There you go. They could just have said 16. Girl, you hear me, honey? You hear me? I wish they would have just did it that way, but I don't know why they don't want to make things simple. Make my life simple so I can teach it better. All right. So if you all right, so if they are 17 and older, so 17 and up, if you're carrying them, you're going to put the 500 mark. If they are 16 and under, just for our educational purposes, 16 and under, guess what? 2,000 for that dependent. But you got to remember, the next year, we're going to have to modify that W-4 again because they're aging out. All right. Does anybody remember what the form is called if your child is in school? What form is it called? What school form should you get if your child is in school and you're carrying them on the taxes?
1098T.
Yes, honey, that's it. You get lunch on us this week. Miss Kamira, what's your last name, Miss Kamira?
Lewis.
I got you, girl. I'm giving away gift cards tonight. We're gonna go ahead and give you some money so you can eat this week and keep your cash. How about it?
Thank you very much. Thank you.
Great. 1098T is what that form is called. Many people don't even know that they're supposed to fill that out. If their kid is in college, you should be having that form and attaching it to your tax return. There you go. That's it. That's what we do in Money Matters. We give you all the information. All right. So her total on that step is 2,000 for step 3. Step 4 is 0, 0, and 0 for this example because she's not exceeding any standards or anything. She's keeping it simple, and that's fine. Here we go. Now, this is the last portion of the form. Look at that. Boy, we're about done here, at least with this one. And then we're going to take a break because I know y'all going to need something for your mind. Okay. Get you some water.
Can I ask you a question before you finish?
Yes, go ahead.
On on the part where you have the older dependents, is that including in that they live with you the whole year till December? Or what if it was a month short?
It's okay. Yeah, that's included. Yeah. We wouldn't cut you short for the month.
Okay.
Yeah, I would carry them. Mm-hmm.
Okay. All right.
Miss Candace, can I ask a question too?
Of course.
Section 4A. I'm just curious, and I'm sure it's nothing we can do about it, but why would they combine your interest, dividends, and retirement income all in the same umbrella, and they're totally different entities?
They are different entities, but they add income to your tax return in a different way. Yes, ma'am. So they're saying that's additional income being added. And because that income is being added there, you want to account for it because it increases your taxable income, but it's not, if it's not, it may not be allocated or you may not be paying taxes over there. So this form W-4 says, hey, I have that extra stuff. So you need to make sure that you don't pay don't pay as little as tax because I got some extra stuff going on too that gives me income in a different section of my life. I hope that helps.
Okay, I guess I'm still a little confused because I know your taxes on dividends and interest and stuff is totally different. I would think retirement income would be, kind of like a separate, I don't know, a separate section.
It is, but in this case, what they're saying is it's additional income if you're putting it all on one form because you're working your job and you're not. If I get interest, let me be clear. If I'm getting interest or dividends, most of the time I don't pay taxes on that, but I still work a job. So because I know I'm getting that, I'm just going to include those amounts on this so that I can pay taxes through my job and it won't hurt me to get that other income outside of my job.
Okay. Yeah. I got it. Thank you.
No problem. Perfect. Good question. Great question, actually. I'm gonna tell you what to do next, and then we're gonna do open questions about anything on this part of the form. So this is it. Your signature is at the bottom, the date, there you go. And we got one more document, but we're gonna take a break before we do that one, okay? Because I know this is a lot. So questions, comments, observations, let's talk about it. I know I have quite a bit more to share, but it's a good time for a break. So let's ask questions right now, and then we'll take a break.
Candace, I do have a question about Section 2. I know in this example, it was primarily for someone who was head of household, but if you are married and you do file jointly, I just want to make sure I understand. So both spouses should claim married jointly.
Yes.
And then whoever has the highest salary should deduct the 2,000 or 4,000 or how many dependents they have. Is that correct?
Yes, that is one method.
Okay, thank you.
Now let me answer this for you as well. Is that Kenyon?
Yes, it is.
Miss Kenyon. All right. On this Section 2, now one of the spouse that's actually going to carry those numbers, the other spouse would actually check that box that's right there in Section 2.
Got it. Okay.
You got it?
Perfect. Yep.
Yes, ma'am. Perfect. All right, great question. All right, any other questions?
So if you're only doing Social Security, you don't have to have one of these forms, correct?
Yeah, that is correct, Miss Denisha. So you don't need this form, but if you have a pension, you need a W-4P. W-4P. If you have a pension, it's going to look very similar to this form. So you could still follow through, do exactly what we did tonight. But the W-4P is what you need if you have a pension or any type of retirement vehicle outside of Social Security that is being taxed.
All right, thank you.
No problem.
Miss Candace, I probably need to maybe speak with maybe a tax accountant on this one because I'm not sure when filling out this form.
Well, I think you're talking to one, honey. So let me see if I can help you.
I hear you, Candace.
Thank you. So I did the 2 dependents, the 1,000 under the 5 on the second line and step 3. My one in college is not wanting me to file because I'll file her even though I'm supporting her and she's not working.
Oh, she grown.
She ain't working. So I'm the boss. And so she says it's gonna impact something that like she gets more money back if I don't file her and she files by herself. But I'm like, you don't have any income.
Yeah, so how's she getting money back? Is she saying she's trying to get that $1,400 stimulus?
That's what she's trying to get. Yes.
Yes, ma'am. She's trying to get the stimulus. So because you already got the stimulus for her when you filed her last year, you already see that money.
Well, I didn't file her last year. I think she did it on her own. She made too much money last year. She worked and made too much money, so I couldn't file her.
Okay, so you didn't get the stimulus for her last year.
No,
So file the stimulus for her.
I don't. Okay.
You
Wait a
can
minute.
read.
Say that. Tell
I'm
me.
sorry?
Okay, you said file the stimulus for her. What do you mean?
You can recoup the stimulus inside of your tax return if you didn't get the $1,400 stimulus for your dependent.
And we're going round and round now. She does not want me to file her because she, and I'm like, but I'm supporting you. I'm paying. I'm doing it. She doesn't.
I mean, I don't know the discrepancy there. I mean, you're supposed to file her because you're doing it right. But if she files on her own, she can get the $1,400 stimulus because she didn't receive it. If she does not, but I'm really curious on why she didn't get it and she filed on her own last year, she should have gotten the stimulus.
She did when the way she filed it, she did get it last year. But this year, since she's not working,
then she shouldn't be filing anything or getting any money.
So she won't even, will she even qualify possibly if she's not even for that?
No, because you can't get the stimulus twice.
Okay.
No, ma'am. I don't know who told her that unless she's going to do some stuff that shouldn't be done, but no, ma'am. If she didn't work, she doesn't have anything.
Okay. If she worked part of the year.
Okay. If she worked part of the year part-time, she's trying to get probably, so it will be more because they're giving her like earned income credit, that kind of stuff. But if not, she would just get the amount that's on her W-2 back in her pocket if she paid taxes.
Okay, I'm just trying to figure out the best way so I won't have to pay in so much and she can still get what she needs for financial aid. But I'm supporting.
You probably need a consultation, ma'am.
Yes, I need to. Can you send me your number, please?
Yes, ma'am. That's no problem. Okay. Thanks. Any other questions about the W-4? I know it's been a lot, and we're going to take a break here in just a minute. But I don't want to miss any questions. Actually, let's do this. Let's take a break. No,
Ms. Candace.
Go ahead. Yes.
Before you do that, please.
Yes.
The W-4P you just mentioned for pension or retirement incomes. So if you go through your HR and you tell them, hey, hold out taxes for Fed and state, you don't actually fill out anything. You just, you give them the percentage or the status. So is that something that they do for you behind the scene?
They can, but the W-4P is what you would need in order to make sure it's accurate. If it depends on the entity as well, because sometimes like teachers' retirement, they have their own form specifically for withholding. So it just depends on which entity you're going with. But if you talk to HR, they will let you know exactly the form that they need or send it to you for you to fill out.
Okay, thank you.
Yes, no problem.
Good information. Thank you.
No problem. All right, anyone else? Let's go ahead and do those questions now, and we'll take a break after questions, just so we can move forward. Go ahead, Tanel.
Hi, Miss Candace, this is Tanil. I have a question.
Yes, ma'am.
And the other 2 years that I've taken this course, of course, I was working and I'm not working. I've not worked very much last year, but I am drawing third-party insurance, long-term disability. So, and that was 10 months of last year. So do you even still have to file a W?
Yes, they should send you a form in the mail off of that third-party disability. It should look like a W-2, but it should be a box check that says third-party income.
Okay.
Yes, ma'am. You should, and you need to file that on your taxes.
Okay. Thank you.
Yeah, you're welcome. All right. Any other questions? Oh, this stuff is so fun. Yes, ma'am. Go ahead.
It's going back to step 4 on the retirement income. Does that have anything to do with our 401k that's taken out from our job?
No, ma'am, you don't have to do it. Oh, that's a great question, Ms. Mel. No, ma'am, you do not have to include that because the 401k on your job is what's called pre-taxed. So that money comes out and it's not taxed at all. So you don't want to include that. No, ma'am. Good question.
Okay. All right. Thank you.
All right. Any other questions? Great questions tonight, you all.
I have a question.
Yeah.
Okay, so I may be thinking about this incorrectly, and please correct me if I am. If you're in a tax bracket where you're a higher earner, and you have 2 children, and or I have 2 children, and so I always do my W-4 like I don't have any kids, so I can kind of break even when or not have to pay in at the end of the year. Is that smart to do it that way or no?
It's smart to do it that way, especially if your income limits are over that 200,000 or 400,000 married. That is something you want to do. So you remember those thresholds that we showed on the screen? That is definitely something to do. Don't claim them for that. Those purposes. Yes, ma'am. I would also say that you would want to have some tax strategies, because the more income you make, the more strategies you need. I'll say, and I'll leave it at that.
Okay.
Yes, ma'am. Great question. All right, let's take a break. It is 7:07. What is it? Is it 7:07 y'all's time too?
Yes, ma'am.
All right, perfect. How many minutes we need? 5 minutes?
Yeah.
Okay. 7:12. Come on back. 5 minutes. Let's take 5. And then we'll finish up for tonight. Thank you so much.
Thank you.
And I'm not going to leave. So if you have some personal stuff, if you want to kind of ask a question or something, I'm still here if you want. Let me do all right. We hope that you had a great break. Let's go ahead and get back to the last document for the night that I have for you. One more document. Let's do it. So if you live in the state of Arkansas, this is our Arkansas form. If you live in a different state, you will have a state form if they pay taxes. So not Texas or Tennessee or Florida, a few of those other states like that. So in the states that you pay taxes, they will have a separate form from the federal form. They are not the same form. A lot of times, a long time ago, they used to say, hey, we're going to put a 5 on this one and a 5 on that one. It does not work that way. So as you can tell, the Arkansas form, withholding form is totally different. It's going to be very simple. You're going to read it here in Coco's example. You're going to read number 1, says check the following for the exemptions claim. In this case, A would be you claim yourself. B would be claim yourself and your spouse. That would be 2 exemptions. Or C would be head of household. You claim yourself and of course the children that you're getting ready to claim in the household. So head of household, you would put 2. Okay. So in her case, she has a 2 here. Do not put 1 on each one of them. You only enter 1 on this section. Okay. So if you're single, no kids, you put a 1, which is under A. All right. And then, continue reading. If you're married, filing joint, of course, you would put 2. You see that there. Again, under B. And in this case, Coco is C, which is 2. The number of children, in her case, she had one child. So you would put that 1 there. Great. Total number of exemptions would be 3, because you're going to add lines 1 and 2 together. How much money do we want to send the government extra? How much extra do we want to send? Anybody want to tell me? 0. How much extra? 0. There you go. Good job. So no extra, because they don't need nada. That's right. They don't need any charities. We good. Now, number 5, I qualify for low income tax rates. What I tell people is just pay the right amount of taxes. That's what you do. Don't try to do anything additional. Pay the right amount. And that's it. If you fill this form out, it'll be the right amount. The second thing, if you check the status of what you qualify for, in this case, the status would be head of household. You check what's best for you. Now let's talk. Ms. Renata, I love your example because you've been talking to me. I'm going to use you for example here. A tax strategy that I would share with you tonight would say, okay, if my spouse is filing the federal form, I'm going to put a 0 on his form and I'll claim the state portion of the return. And that way we balance out a little bit. So now the state portion of the tax filing. So I would fill out, if I were you, Ms. Renata, I would take the state portion because you were doing 0 and you would put a 3 on your state and put a 0 on your husband, because remember, it's a shared form. So we need 3 in the household collectively. I think it was Miss Kenyatta. I'm messing it up. She mentioned something earlier about being married. Remember, it's a shared form. So you don't want to You don't want to put a 3 and a 3. That's 6. Okay, remember that. So it's a shared form if you're married, filing joint, and that's great. All right. That's literally this form. Everybody got it? We good? Can we move? Uh-oh, I'm not moving yet. Everybody good? Yes?
Yes, ma'am.
Yes.
All right. Perfect. This was quick. You see, that was quick. Now the rest of it should be painless. Now let's do it. Here we go. We got a federal form filled out. We got a state form filled out. We are winning. We are not overpaying our taxes. We're paying the right amount of taxes. And if the right amount happens to be 0, that's fine too. Okay, so let's get into what's happening whenever we're overpaying taxes, right? Because our goal tonight was to discuss lost opportunity costs. So how much of your money is Uncle Sam holding? Anybody get a big refund this year? You know, filed the taxes already? Got that big old refund, Miss Ann? I see you nodding over there. Yeah, she's shaking her head. That's right. Well, Miss Ann, me and you gonna have a conversation. All right, I need one of these businesses.
My situation changed. I filed head of household. Every other year I file head of household per my divorce decree. And it messed me up because I moved states. So I had some extenuating things. I was, you know, I got a lot of money back, but I'm just thankful I didn't have to pay.
Yeah.
That's the way I'm looking at it.
That makes sense. Well, what I will say, Miss Ann, is every year you'll need to update your situation, your form based on your situation. I have clients who do that often. They share the kids. So every other year they do kids and stuff like that. Definitely something to update consistently. Okay. Perfect. Well, I'm gonna pick on you tonight because we talking. All right. Is that okay? All right, perfect. So Miss Ann, how much of your money is Uncle Sam holding? He held a lot this one year. Let's say it was $300, $3,600. And who she like, yeah, that was me. Okay. And that's $300 a month that could have been in your pocket, right? So that's a $0 amount of earning potential. And what I'm sharing with you all tonight is not to, of course, make anyone feel bad about your refund. I'm just wanting you to understand that if you get one, then have this understanding of what happened and that you can change it if you desire. Okay. And it's a shift of the mindset, that's for sure. So this is for example purposes only. I want to show you some numbers of what could happen with your money if we start shifting this moving forward. One of the things we teach, and I went over this last week, was the rule of 72. And we're going to take $300 monthly and we're going to say, all right, that $300 monthly is going to double over a 30-year period. Well, in 5 years, that's $27,000. If you invested that money, in 10 years, that's $68,000. Oh man, in 18 years, that's $195,000. And in 30 years, it's $727,000. So sometimes it's like, you know what, Candace, I wouldn't dare overpay for that long. But I want you to think about how many years you've been getting big refunds and excited about it, and it's spent before you even get it. Right? There's always something to pay for. Oh, I can go ahead and pay off that credit card. I could do this. But if you were getting that money every single month, guess what? That card wouldn't even been ran up because you had the cash flow in your pocket to manage, right? So let's keep going. What happens if you had $500 a month? Ooh, that's a $6,000 refund. You happy? You spending that money, right? Well, guess what? Let me tell you about the lost opportunity cost. Now, Miss Ann, I ain't talking about you no more, girl. This other people, okay? We're gonna talk about other people. So $500 a month over a 30-year period, 5 years, $43,000, 10 years, $109,000. 18 years, $315,000, or 30 years, that's $1.2 million that you allowed for the IRS to hold your money. I'm gonna wait. That's money that you could have been investing instead of allowing someone else to hold it in their pockets and invest it for you and not give you any of the proceeds, right? We have to start to shift our mindset to see our money differently. And when we begin to think about our lost opportunity cost and what we could be doing with that $3.33 a day, which is $100 a month, or the 300 or the extra, right? We have to begin to see things a slightly different from what we've been seeing it. Okay. So I know it's a lot to digest. It's a lot to do initially and to kind of pull in together. But what I want you to understand is that you have control over your money. You really do. And you can do anything you put your mind to, and you can change Definitely don't want to stay the same, especially if you've been overpaying your taxes. All right, so this is my time. I know we're going to go over some homework, some things for you to do, but I want to answer any last questions for the evening before we get into your next week's assignments and what we're doing next. Oh, we on good time too. Oh yeah. All right. Y'all okay?
Yeah, we're good. Keep it
They
up,
got
girl.
quiet on me again.
We just got up off the floor.
Absolutely. Absolutely. I love it. I love it. When those things happen, it's like, okay, I'm digesting, Candace. Just give me time. I know I move a little fast sometimes. Okay. All right. Let me give you a second. Any questions, observations? Did you have an aha moment? Anything? Let's talk.
My aha moment is the fact that I could have had $1.2 million. I'm over here with $12. I'm completely not understanding. I'm just gonna pause myself again because no.
Yes, ma'am.
No.
And you know
I think I feel the same way she does. Not that I have the $12. I was sitting here thinking, I sure wish you would direct me in the direction of the 10% rate of return on an investment.
You
off
have
the
to,
top of your head.
You have to definitely stay for class because I can't ruin the next sessions. Yes, ma'am. Okay, great. I do have a question in the chat here. Mr. Chapman, I'm sorry. I think I saw this question. I apologize. I missed it earlier. Mr. Chapman says, I received an IRS letter called the Economic Impact Payments for 2021 for our records. Can you explain the filing for this year? The Economic Impact Payments is not taxable. It's just telling you how much you received in the stimulus check, and that should be a total of those $1,400 that you received throughout the year. Now, I want to be very clear, Mr. Chapman, the additional document that should have been received if you have children should have been a document that says your child tax payments, the advanced child tax payments that you received, you do have to file that on your taxes, okay? So no, you do not have to file the economic injury payments, which is the stimulus check, which this year is the $1,400 stimulus check. They're just letting you know how much you received, and depending on your software, you can put that in. Additionally, the advanced child tax payments that were received by many people, $250 to $300 a month, depending on the age of your child. Guess what? You do have to file that. And if you leave it off of your taxes, you are going to be in trouble. So let's be clear, and it's going to be a delay in your refund. And let me tell you how right now is not the time to have a delay in your refund, because the IRS is taking a little bit longer than normal or preferred for anything that's done in a manual way. So definitely wanting to make sure you file that properly. Okay, I hope that's helpful, Mr. Chapman. Let me know if you have any additional on that.
Thank you very much.
No problem. All right, Latrice says, this is good information. Great, I'm so glad that you're enjoying it. Anyone else? Questions, comments, observations? We're talking, let's do it.
Hey, Candace, I have a question. This is Denise.
Yes, ma'am.
My husband he would be filling out 2 W-4s because he has 2 jobs that, and so we want to make sure that he's filling out them correctly. And I'm a 1099. So okay. I know that we're paying a lot in taxes. We don't know what a refund is. So we need to, figure out a way that maybe we can, find a way to kind of help us on our taxes. We're probably missing some things.
Definitely. Yes, ma'am. That is a great conversation. And let me just kind of walk you through. I'm gonna go back to the PowerPoint real quickly for you, because I'll show you what he'll need to do with those jobs. Okay. Let's see here. Okay. When you work 2 jobs, I don't know if this was the best screen for that. Okay, sorry about that. When you work 2 jobs, this right here, this section 2, you see that? It says multiple jobs. You go through, and on his main job, he would file regular, whatever you all's situation is. Married, filing joint with the children, or whatever that looks like, okay? But with the second job, he would check that little box right there. You see it online on this section 2, check that box on the second job. What may be happening, he may be putting a number on both of those jobs, and it's making it to where you all are paying too little tax because he's working the 2 jobs, but he's also paying no tax, paying too little tax on one of the jobs. So which job should he put this box check on? He should check the box on the job with the lowest amount of income. So the part-time job that he's doing extra. Okay?
Got it.
Does that make sense?
Yes.
Perfect. As far as your self-employment and your business owner and all that stuff, you definitely want to have some strategy going. And if you're doing your taxes yourself, you may be saving $200-300, but it's costing you thousands.
Got it. Okay. Thank you.
No problem. Any tips for single, no dependents, and how to have more deductions? You need a business, Miss Shannon. You need a side business. I know you're gonna get tired of hearing me say that, but everybody in America needs a business. It's actually your duty to have a business, because let me tell you this real quick, because I got a little extra time since we're gonna get ready to move to your assignments. In America, there are benefits to owning a business, but let's be clear. The government says we're going to give you benefits to opening different kinds of businesses because we need help to generate the economy. Guess what? When you open businesses, you stimulate the economy with more money. The government can't create enough programs to help itself, right? They can't create enough housing programs. They can't create enough benefits for everybody. So they rely on business owners to create businesses to help them inside of the economy. So guess what? If you have a business, there are benefits to owning that business, and they give you tax breaks for owning that business and running it properly. Now, yes, you need to keep your records and do it properly, but it's your civic duty to help the government to get more housing, or to help the government to have better distribution, or help the government to move things from place to place, whatever it looks like, or whatever you're doing to feed the people in the economy. That's our duty, right? You need a business. I know you probably never heard that before, but I'm sharing it with you today. You need a business, a home-based business, preferably, so you can keep more of your money in your pocket and turn your regular expenses into business expenses. But that's all I'm gonna say on that tonight. We should probably do a class on that. I'll think about it and see what we can do next time.
Okay. Candace.
Yeah.
So I guess my thing is trying to find the time to do that because of my regular normal career. I'm an educator. So it's just more about how and when.
Okay, Miss Shannon, let's talk about that real quick. Let me help you out. Let me tell you, okay? Okay, let me tell you. So you're an educator. That means you teach through the day and you're busy, but many of your students may say, hey, Miss Shannon, we need some tutoring, or their parent come to you. Maybe you need a business that's very similar to what you do on a regular basis because you're probably doing it anyway. So that's the thing you can do. You could do an online tutoring service to where it's not creating so much time you to have to be there and things like that. So these are just ideas, but I don't want you to make business hard. I want you to take your passion and turn it into money, and we can make some money and write off stuff, different things for your lifestyle, and begin to pay less tax. But you asked me the question, for single person, no dependents, your business would be your baby. And that's what I would say. All right, you're welcome. All right, take your passion to, yeah, there you go. Take it, turn it into income. Okay, any other questions before we get into your assignments?
I have a question.
Surely.
Hi, it's kind of a two-part question. One, I think it goes back. Did you mention something about being able to carry prescriptions or something for tax deductions? And I guess my second part of the question would be this, and I'm not quite sure how familiar you are with Social Security, because I do receive Social Security. However, I do some financial investments on my own privately, and just kind of curious at what point would the income that I make affect the Social Security that I am receiving, because I did exceptionally well last year on some investments, well over 100,000. So I was curious to whether or not you know anything about that to where it could eventually affect the Social Security that I am receiving.
Absolutely. So first question, can I deduct medical expenses, things like that, prescriptions? The answer is yes. There is a portion of it that will be deductible, so it may not, depending on how much it is. If it's not significant, it won't seem to make a difference. But remember, put it in anyway. Make sure you include it because it may be an itemization on the state. Second answer, and I'm going to ask for Deacon Thomas to chime in on this as well. There is, you can make about $1,100 a month, which is roughly about 12,000 and some change during the year of 2021, right? So you have exceeded that amount, and there will be they'll be asking some questions and talking to you about that, and maybe doing a payback on some of that Social Security. But Deacon Thomas, you want to kind of chime in on that as well?
Yeah, Candace, there's some strategies that he can use, of course. He's investing personally, but if he had, say, a LLC or some corporation, and the corporation is an entity just like his, of course. So that corporation did all the investing for you, then the corporation can pay you scheduled money, and not in the whole $100,000 is not claimed as income. Right. That's what a lot of people do. They use their corporations as an investment vehicle in situations like yours, of course, because they can control it. So what you might want to look at this year is setting up some type of corporation and using your corporation to do the actual investing for you.
That's accurate. And what he's saying, Lee, is it's going to help you to separate yourself from your personal stuff, right? Your Social Security, that kind of stuff, and putting it under the corporation helps you to separate yourself from that. And then you can control it. That's what he's saying.
Yeah.
Okay.
Yeah. So that means you need some good strategy.
Also, Candace, the young lady you was talking about earlier, the school teacher, of course, a lot of guys don't understand the power of the home-based business. What Candace is talking about, how you can shelter your income and lower your tax bracket. That young lady has a cell phone. She has a car. She drives. She has an office in her home. She's past the internet. Once you establish some type of home-based business based off of what you want to do, you can write part of those expenses off your regular income. Let's say she has a home-based business, and because of her regular income, she lost $10,000 that particular year in her home-based business. That loss comes from income shifting money that she's already spending to the business expense. There's no real loss, but there's a paper loss. But that $10,000, of course, can be written off her actual income and lower her tax bracket that year. So a lot of strategies, and I tell people, don't let your pennies get in the way of your dollars. Now, Candace, you want to tell them what that means?
So basically, don't look at the small amount of money that you may spend on the front end and lose out on the big amount of savings that you can have on the back end.
Not just that. I want you guys to understand that every instructor in this particular class is really important, are experts at what they do. So you may be getting your taxes done by somebody that's a friend or a regular tax preparer at H&R Block or whatever. But if you got certain situations, be willing to spend the money so you can get the strategies that you're not going to ever get from those guys. So don't let your pennies trying to save a few dollars, so you don't want to pay a little bit more to get the strategy. So take advantage of all these professionals throughout the week, throughout these next 6-7 weeks. You're getting the inside scoop. You get the inside scoop because your part of the money matters. And you're going to get the banking side, the credit side, the real estate side, the investment side. Our goal is to get that cash flow. Back to you, Candace. I don't want to interrupt your flow. You're doing good.
No, I'm done. You're good. You said don't miss that cash flow. Keep talking. That's good too.
What's important in this entire class, we keep talking about mindset. There's got to be a huge paradigm shift for each one of you guys in this class. And that paradigm shift is about to be in your mindset. See, if you can change your thinking, okay, with all this new information, then you can change your strategy. If you can change your strategy, you can change your life. So this information don't mean anything if it's not put into action. Our goal is to teach you strategies, first how to find that money, where things going, have some real life conversation with yourself about where the money's going, is it necessary? And to be the CEO, the CFO. When I first started this class, I said, our goal is for you to become the CFO. And what you don't know about money, what you don't know about taxes can hurt you. And that's why we have these classes to help you find this money and redirect that money and change the trajectory of where your money is going. We want your money to be little soldiers working for you in your future, but you got to find it. So any other questions? A great time to get more questions asked. This is good stuff. This is good stuff. Great job tonight, Candace.
Yeah. Did you say if anyone has to pay the IRS, they didn't have enough taxes taken out during the year? Ms. Lisa, that is accurate, maybe, right? Because it depends. That's my favorite word. Oh, I ain't got to say it all night. The answer is it depends. Did you file your taxes properly? Like, did you know that if you didn't file your taxes properly, the IRS is not going to contact you and say, oh yeah, we owe you money because you missed this. No, they're going to say, oh yeah, hey, you didn't file right. You owe us money, right? Yeah. They're going to contact you for that. So yes, Lisa, if you didn't take out enough taxes, you likely owe, yes. But my question to you would be, let's make sure you filed that tax return properly. Let's make sure you didn't miss anything, especially, and I know, like Mr. Thomas said, filing on TurboTax, those kind of things save you a couple dollars. But when you start making certain amounts of money, you definitely want to start just doing a few things differently and maybe getting some professional assistance.
Hey, listen, guys, I'm not trying to do a radio commercial for Candace tonight, but I've got to tell you a true story. As a financial advisor for the past 30 years, I've got clients all across the country. At St. Mark, one of my clients stopped me in church one day. She says, Deacon Thomas, we've got a $5,000 tax bill. I said, what? These two people had full-time jobs and they both had part-time businesses work from their home. This is a true story. I said, listen, before you do that, I've got a young tax lady I want you to meet with. And Candace, you can tell them the story from there, from $5,000 to what? Because they paid for the information and got bill information.
Yeah, they ended up getting a refund of about $3,500 and another couple thousand from the state after we finished. We did a review of their tax return. They were missing a ton of stuff. And yeah, it was great. It was great.
So all I'm trying to say, guys, information is powerful. There are a lot of tax strategies out here. There are only 2 tax systems in this country. And those 2 tax systems, one for the employee and one for the businesses, okay? The business tax system is designed for businesses to take advantage of the incentives, like Candace said earlier about our country. So having a home-based business or whatever you want to call it, a consulting business, whatever you want to call it, if you have a tax situation, use the tax strategies to your advantage. Obama has a home-based business. Bill Clinton has a home-based business. All these guys got home-based business. You want to tell them what it is, Candace?
They write books.
They write books. They write books from all. So don't take the information lightly. But here, we need to get into the homework. Any more questions before we jump in?
Yes, someone asked if it would be great if you were married filing jointly. Would the home-based business be good under the other spouse? If you are married filing jointly, if one of you have a home-based business, it's going to help both of you. If both of you have a home-based business, it helps both of you. But one home-based business to start out, if you're just starting, that's fine. If you decide, ooh, extra tip, ooh, this is going to be good. If you decide to file that business and you both are going to run it together, that is a home-based business and it's a partnership. Ooh, this is good. If 2 people run a business together, it's a partnership and it needs to be filed on a partnership return. Remember that. So married filing jointly, if one of you own it, okay, great. If both of you own it, partnership, that's great too. And you'll make sure you talk to a great tax professional to assist you with that process. Great question there.
Hey, Ken, since you brought that up, let's talk just a little bit real quickly. We have a lot of people across the country, probably on this call, that are doing real estate on the side, flipping houses, those kind of things. Should those people set up a real estate corporation?
That's a great idea. Okay. That's a great idea, especially because you're making so much money very quickly. I'm going to say definitely. Ms.
Absolutely. Thomas. And that real estate corporation, let's say you make a ton of money that year, that real estate corporation is your home-based business. Let's say you make $40,000 or $50,000 this year. Your real estate corporation can take part of that money and set up a whole separate pension and not pay tax on it, make it an expense. Let's say you made $50,000 and you took $30,000 and put it inside your pension. You guys just catch that? You got a whole separate retirement plan, a SEP or a 401k, solo 401k, whatever it is. You can take that money and make it an expense and invest it. You got $20,000 left over. You got expenses from traveling and going to see sites or whatever you're doing. You can write off another $10,000 or $15,000 and end up with a $50,000 profit with only a $5,000 tax liability if you understand the strategies inside these corporations. Very, very powerful stuff, guys. So get the information, put it in place, but it's a paradigm shift that you got to make with yourself. It's a paradigm shift in how you think. Okay. Candace, any more questions? We got about 13, 14 minutes to go. So you want to go over this round? Yeah, let's get to that. Okay?
Homework. We got strategy. Listen, we told them to do their homework. Why, Mr. Thomas, Deacon Thomas, we told them to do it. Now it's time to implement. You want to go over the homework? Hey,
go ahead. It's pretty simple. I kind of want to get to the crown.org so they can know what they're looking at. We only got a little time left. Can you get to that site?
I'm going to give them the steps first. So if you all would take this screenshot, take a picture, write it down. I'm going to show it to you, and then we're going to go to the site. Actually, if I give you this, you can go to the site and you'll be great. So crown.org, and make sure you don't put .com. Crown.org is a site where you're going to create your debt elimination plan. The first step, you're going to go to financial calculators. So I'm going to tell you what I'm going to tell you, and then I'm going to show it to you. First step, financial calculators. You go there, click it. Then the next step is Debt Snowball. You'll click that one, and then you're going to go and it'll actually ask you for the information that we already gave you. And I'll show you that in just a moment on what that'll look like. So first step, crown.org. Number 2, financial calculators. And number 3, debt snowball calculator. This is the steps for when you get to crown.org. One of the other assignments is to, before I take you there, because I'm going to put it on the screen, is to make sure that you get your credit report. Pull your credit report at the free one at annualcreditreport.com. www.annualcreditreport.com. That way you have your credit report for next week, because the bankers are going to be going over credit. It's going to be great. Okay, so I'm going to go out of this. Let's take you to the website so we can, and I'm hoping, let's do a stop share here. One moment. Let's see if I can share. Here we go. Let's share my screen. Maybe. Okay. And you know, earlier I was having some issues, so we'll hope that everything goes the way we're playing. How about it? Okay. Yes. Crown.org. Here you go. When you get to the site, we are looking under, maybe did I give you steps? Somebody tell me what I said. What did I say? Financial calculators. That's it. Go under money. I need to add that section. Hover over money. Go to financial calculators. You're going to click that. There we go. And then you're going to go to debt snowball calculator. You're going to open that calculator. Click that. And guess what? The next steps are going to be the information that we gave you in that sheet. The creditor name, the balance you owe, the interest rate, and the payment amount monthly. Now, remember, when you're doing the payment amount monthly, you're not putting the large amount that you pay. You're putting the minimum payment, because we're going to apply any of the extra money to the actual debt snowball process. Again, this is the same document we gave you on the first night that has the creditor name, the amount you owe, the interest rate, the payment amount, and I think it even has the due date on it as well, but that's that same document. It's the expense worksheet, and this information you're going to add to this debt elimination process, and when you put it in, guess what? It's going to tell you when you can be debt-free, and you'll walk through these steps throughout this whole calculator, and I think it's going to give me an error. Oh, no, it didn't. Then you're going to put the extra payment amount. So let's say you found $100 in cash flow. Guess what? it may be $200. It may be $50. Whatever the cash flow is that you found in your household, you put that number here, and then you'll be able to go through and get the results on how much, when you'll be debt free in that process. Deacon Thomas?
Candace, in this particular area too, you told them earlier, some of these people are paying a little bit more on their credit cards and bills than the minimum payment, okay?
Right.
So we want to make sure they put the minimum payment in. Any excess money you're paying, that money can be shifted to the extra chart down there. So that's it, a person's your credit card bill is $25 a month, you're paying $50. We just want you to put the minimum payment in, that payment amount, that $25. Want you to take the other $25, that's going to be the excess money that goes down inside of the extra money. Can you scroll down, Ken? Yeah. Yeah, the extra payment. So anything extra that you're paying, that money goes inside the extra payment because the system has to work off of minimum payments, okay? If you want to cut some money out of your cable bills, your food bills, or whatever, eating out, we got to find extra money here to make this thing work for you. That's how it works, off of extra money, okay? So I want to make sure we're real clear on that.
Awesome, awesome. So last time, go to money, financial calculators. When you click financial calculators, it's going to take you down. You go to debt snowball and enter your information. There you go. That's step by step. So we should be able to do that. And we gave you every step. I think that's, I hope that's helpful. All right. Questions, comments, observations. We are at the end of our evening. Deacon Thomas, you got anything else you want to add to this?
Yeah, I want to talk a little bit about the extra money we found with the W-2s, W-4s. There's something called Parkinson's Law. Parkinson's Law. Can somebody tell me what that stands for? Somebody's going to get a gift certificate tonight. Parkinson's Law. Anybody tell me what that is? Wait, you go to the internet and look it up, what I'm talking about. But Parkinson's Law, I'll let them go to the internet and look that up, Candace. I need you guys to read that and tell me what that is, because here's what happens typically. People get their tax returns back. They get $3,000, $4,000, $5,000, $6,000, $7,000, and they plan to pay bills and stuff off. They plan to do this and do that. But typically what happens, that $3,000, $4,000, $5,000, $6,000, $7,000 never get used in the proper place it needs to be used. So it ends up going to areas that it shouldn't go to, okay? Now, the $300 or that's it, Parkinson's Law. The $300 or $500 you're gonna get back per month when you adjust your W-4, you gotta make sure you understand Parkinson's Law so you don't fall into that. Can I just go ahead and go online and go to that, because I want these guys to see that and read that, because that's the number one problem why people can't get ahead financially, not just with finding extra money, it's also with their jobs. I'm gonna talk about that for a few minutes before we close out. Has anybody went to Parkinson's Law on Google and found out what that is?
Well, when I read it, it basically sounds like people not taking advantage of the time that they have, and they're procrastinating. And then when you procrastinate, it's causing you, it's basically having a negative effect. So it's like at work, if it takes you an hour to complete something, but within that hour you're on Facebook and you're getting up, going to get a snack and all that type of stuff, then you haven't managed your time really well. And so instead of taking an hour to complete the task, now it's 2 or 3 hours. And so the same thing with your money. If you are not, if you're going to take this extra money from not eating out and, things like that, if you're not going to take it and actually use it and apply it to this time principle, then you're going to actually end up taking longer to pay off, to become debt free than if you would, take advantage of the plan you put in place.
Ms. Miller, that's good. I like that. That's good. You use a job as an illustration. That's very good. Now, Parkinson's Law is real simple. People tend to raise their expenses to their income. I want you to get this. Let's say you got a husband and wife team or individual working, they're making $50,000, $60,000 a year. They got a good lifestyle, they're living, but they get a raise, or this person wanted to marry somebody, get another income to come into their household that's $30,000, $40,000, $50,000. guess what happens to the other income when that person's already living on one income? Can somebody tell me what happens to the other extra money coming in?
They start spending it.
People, there it is right there. People tend to raise what? Put that back in the chat back up there. What was that? Everybody see that chat?
Raise their expenses to income amount.
You guys got that? See, when you get to $300 or $400 a month extra from your W-4, or you get an increase in a raise or bonuses and those things, don't find something to do with that money until you get your other priorities in order. So what are those priorities? We're going to talk about that in the next couple of classes, of course. We're going to talk about the emergency fund and the other things you'd be doing with that money, but do not fall prey to Parkinson's law. Don't let your expenses rise because you got more money coming in. Anybody ever did that before? You know, you were making $30,000, $40,000 a year, your income goes up to 40, 50. Guess what? Your expenses go where? Up to 40 or 50. Well, it doesn't have to be that way. Right, Marcus?
That's right.
Absolutely. I think you're going to answer that for us, right? Parkinson's law? Okay. That's the banker, guys. And he wants you to come to him and get all kind of loans and credit cards. Don't fall for it. Just kidding, Marcus. Hey, listen, let's close this call out tonight, Candace. Just got a few things you want to make sure to get on the homework. The debt snowball sheet needs to be completed. The financial binder, guys. The next class is going to be a check for your financial binders to see how far you're along. The 5th class, it should be finished on the 5th class, okay? Keep checking your ancillary insurance or your paychecks and stuff. Sometimes people got 3 or 4 different contracts coming out of their paychecks and they're duplicating the same benefit. So check to make sure you're not that person. A lot of husband and wife teams have insurance on both their jobs. Take a look at that insurance if both of you guys are paying for health insurance on your jobs. Get together and compare the benefits and compare the costs. One of you guys may be able to drop that insurance and shift that extra $200, $300 a month back into your household. Look at your memberships that you're probably not using. Audit your utilities. Make sure when you leave the house and stuff and leave rooms and stuff, turn the lights off. It really makes a difference. Don't leave your lights and stuff running all the time. You're not in those rooms. You'll see over a period of time that will start going down. Okay. I think that's about it. Trying to get through. We got 2 minutes here, but any questions? Any questions?
I have a question.
Okay.
Okay. I work at home for a company in South Carolina. Can I bill my internet services or my taxes? I have a portion of my house set up like a small office as well.
Okay.
Miss Anise, that's a wonderful question.
That's a good question.
And I really wish that I could tell you yes. But if you do not have a business, the home office deduction for a person is no longer deductible due to the Tax Cuts and Jobs Act of 2018. No, ma'am.
Absolutely.
All right then.
Absolutely.
I'm sorry. But Miss Anise, if you get your business, girl.
Yeah,
Yeah, that's it.
Start a business.
We're gonna write off all that stuff, honey.
Okay.
All right. That's
okay. Thank you.
No problem. Great question.
Any more questions?
I think we got one that says, could you slowly restate what you were saying about setting up a real estate business and creating a tax deductible pension in the income? I really think that's a lot deeper. It is, and we may have time for it because it's 8, but you're welcome to do it, wise man. Ms. Thompson.
Well, I'll take about 30 seconds and just talk about it. Any kind of thing dealing with real estate corporations, let's say you are buying and selling houses or flipping property, that's actually a business, guys. So if you set up a corporation or LLC or S corporation and put that inside your business, now you qualify for all those business deductions. Almost anything you're doing as a hobby can be turned into a business with proper documentation. So I would suggest you sit down and maybe talk to a financial advisor or a tax professional and find out, do these things qualify as a legitimate business where I can actually take advantage of the tax deductions and stuff. There are 450 tax deductions out there just for the average small business person. Most people, if you only use about 7 of them, it could change your income over the next 12 months. Okay. Mm-hmm. But that's a one-off. Feel free to reach out to Candace or myself, and we'll walk you through that process, what that looks like. Okay.
Awesome sauce. It's a good time to pray.
Absolutely. Any volunteers tonight? Somebody did real good last other week, didn't they? Any volunteers to pray us out tonight?
I will.
Okay, Ms. Barnett, go ahead.
Father God, thank you so much for tonight. And I just thank you for the opportunity of this class, the Money Matters class. And thank you for bringing us together in a place where we can learn and apply what we take from this class and just do the necessary things that we need to do to help ourselves get better in our finances. Thank you for the instructors, all the information that they have brought forth. It is for us to apply it, oh God. And we just thank you for everything that is taking place right now. We know that all things work together for the good of those who love you and to those who are called according to your purpose. So we believe that this class is for a purpose for us to learn and just do whatever we're supposed to do. We thank you and we praise you in Jesus' name. Amen.
Amen. Thank you. Thank you.
Awesome.
That's wonderful.
Wonderful class.
Absolutely. You guys, great job tonight, Candace Woodruff. Everybody give her a hand.
Yes.
Hey.
All right.
Thank you. Good
We got a
night.
great team. Great job tonight. Thank you all. Have a wonderful evening. See y'all next week. It's gonna
Next
be
week.
Friday.
We're doing
Bye.
credit and
Bye-bye.
debt. Let's do it. Good
Good
night.
night. Good night.
Everyone.
Night.